Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 1st of June 2020. And to all silver bugs out there, it is a most glorious day. In that, as we predicted last week, silver has exceeded the $18 mark today. Now, before we talk about this, it's worth noting that yesterday we produced a video different to our normal range entitled Banks, You've Just Gotta Love Them. Or have you? Where we highlighted that UK banks in particular, but not solely UK banks, whilst having performed in offering 100% government-backed loans to businesses and self-employed people, their efficiency is somewhat questioned, and literally thousands of people are still awaiting their decisions. Now, coming back to silver, we produced our gold and silver weekly update for the week ending the 29th of May on Saturday, where we stated that we expected silver to surpass $18 today, but will find some resistance at $18.50. Well, at the time of writing, which is 10:45 GMT plus 1, silver is currently standing at $18.18, after having reached $18.41 just over 3 hours ago. And although it has fallen back, it's still 31 cents higher than Friday's close. Now, gold too is up, as we predicted, but not to quite the same percentage as silver. Gold is currently $1,737, and like silver was higher a few hours ago at $1,745, but is still some nearly $6 higher than Friday's close. But by comparison, silver is up 1.75% and gold is up just 0.33%. What is interesting, of course, is that these prices have risen while equity markets too have also risen, especially as London has eased its lockdowns and a number, not all, but a number, are going back to work from today after a couple months resting at home. What is noticeable is that the dollar index is down 0.27 at 98.07, but it was lower earlier today by as much as a little over 0.5. And of course, this does affect precious metal prices. What we are seeing, however, is that as firms start trading and manufacturing again, the concerns and anxieties over the industrial demand for silver is beginning to abate. As products are produced, physical demand for industrial purposes begin to increase again, and so we should not be surprised to see silver's price rise. At the same time, we are faced with continuing geopolitical difficulties, which are keeping the monetary demand for gold and silver, therefore, propped up. And so where silver had a positive and a negative momentum previously, that is, positive monetary demand and negative industrial demand, it now has both working in its favour and acting as quite strong tailwinds. Now, we cannot underestimate the industrial demand effect, as in recent years it has ranged anything from 50 to 60% of total physical demand. So when this tap is turned off and then turned on, it obviously has an effect. Now, before we claim it's all about physical demand, this is not quite true, in that data published on Friday showed that speculators cut their bullish positions in COMEX gold and increased them in silver contracts in the week up to the May 26. So all of those who criticise and chastise the COMEX for price fixing or rigging and keeping the price of silver down, actually they can now see that this rigged market is currently benefiting their preferred metal. Now the reason is simple. They are seeing the same thing that we are and are trying to get ahead of the game. The issue, of course, is how much higher can silver go over the coming weeks and months. Well, as we pointed out in our update on Saturday, much also depends on the economic data being published and the actions of President Trump and the rest of Europe in relation to the trade deals and arrangements with China, and as to whether they are still on or are now off the table. Now, we have stated that this will be the decade for precious metals, and we stand by it. The only difference we may have with many is the speed and extent of their rise. That said, if you purchase silver via ETFs or by a reputable vaulting service, you could have picked it up at just $12.50 some 2 months ago. and now you'd be holding a $5 plus profit, with undoubtedly more to come. Of course, physical holders may have to wait a little longer to see that level of profit unless they manage to sell their items on auction sites such as eBay, for example. But having witnessed extremely high premiums some 2 months ago, which have now dropped by at least 50% in most cases and higher in others, then that profit may still not be quite there yet, despite the underlying spot price having risen. Now, also for those who follow the other industrial precious metals, palladium is currently up 0.5% at $1,966, and platinum, though was up earlier today, is currently down 0.3% at $844. For those who also find cryptocurrencies attractive will be pleased to hear that Bitcoin has risen some $491 over the past week, with $48 having been gained today, and it currently stands at $9,505. So it is an exciting time for both gold and silver in particular. Of course, we're going to see movements really between $17.50 and $18.50, and then potentially a step up from $18 to $19, but we're not quite there yet. Now, for those who wish to receive some additional positive news, we thought we would read to you an article published by Forbes on the 21st of May. Never let it be said we're only putting forward negative cases. This is what the Forbes article has to say. Forbes article dated May 21st, 2020, by Tyler Gallagher, Forbes Council's member. Tyler Gallagher is also the CEO and founder of Regal Assets, an international alternative assets firm with offices in Beverly Hills, Toronto, London, and Dubai. Headline: The forecast for silver in 2020 to 2021. This has been a tumultuous year for investors, with Brexit, negative bond yields, a global trade war, an oil price crash, and of course a worldwide pandemic that's ushered in what's expected to be the worst recession since the Great Depression. The question, then, is whether our money can be safely invested anywhere. Fortunately, many experts are bullish about precious metals. Although the price of gold has risen roughly $400 per ounce in the past year, some analysts suggest that silver may be the better buy in the medium and long term. As the CEO and founder of an online alternative investment brokerage, I'm constantly keeping my finger on the pulse of what precious metals experts forecast for the years ahead. In this article, I'll take a closer look at the silver forecast for 2020 and 2021 to give investors an idea of what they can expect. How has silver fared so far in 2020? Well, let's first assess the recent performance of silver bullion during this time of uncertainty. Although the price of silver has fallen since the outbreak of the novel coronavirus, its value has held considerably well compared to the US stock market. During the worst of the stock sell-off in mid-March, May silver futures dropped $0.48 or 48 cents to roughly $12.34 per ounce, according to Kitco.com, while the S&P 500 had fallen 27% year-to-date on March the 18th. Virtually every asset price fell in March due to the sell what you can mentality many investors held during this frantic period of uncertainty, driven by the coronavirus and oil price war. However, allocating a portion of your portfolio to silver bullion would have softened the blow caused by the coronavirus sell-off. Is silver susceptible to price suppression? It's worth noting neither the US federal government nor the Federal Reserve System can assert significant control over the price of silver. In 2019, the US accounted for an estimated 3.6% of global silver production, compared to Mexico and Peru, which produced 6,300 and 3,800 metric tons, compared with the US 980 metric tons, respectively. Therefore, the price of silver is ultimately beholden to global market forces rather than domestic price manipulation. Silver and industry. Silver is a metal with many industrial applications. In 2018, silver was heavily utilized for industrial manufacturing, in particular for use in photovoltaic solar panels, brazing alloys and solders, electronics and ethylene oxide. This figure doesn't include silver used in the production of jewellery, which required another 200 million plus ounces that year. What's particularly noteworthy about silver's industrial usage is that it's prominent in the production of solar panels and batteries, which bodes well for the metal's long-term price. The worldwide market for solar energy was expected to rise in value from $52 billion in 2018 to $223 billion by 2026. Key factors that could influence the price of silver in the near term. In an article forecasting the price of silver in 2020, Capital.com's Valerie Medlever mentioned that silver tends to perform poorly when the US dollar is strong. The article went on to note that in Q4 2018, the price of silver fell 14% when the US dollar performed well. Although the US dollar is currently strong, the Fed has recently cut interest rates to effectively zero, which could weaken the dollar, so it remains to be seen how this will impact the price of silver through the year. A strong dollar generally signals a weak silver price, and though there are exceptions, such as we saw in 2018, high interest rates tend to mean higher silver prices. In other words, if the dollar weakens, we could have two competing forces pushing the price of silver up and down simultaneously. Regarding supply, a January 2020 report by Scotiabank determined the global supply of silver is fundamentally oversupplied, but remains attractive to investors as a gold proxy. The authors note that silver can play an important role as a currency hedge, and upside growth is expected due to modest increase in industrial demand. Overall, the report is mixed about silver prices for 2020, estimating possible outcomes of $15 to $23 per ounce, depending on gold's performance and demand drivers. The authors estimated that $17.50 to $21 per ounce is the fair, market-aligned range for silver in the year ahead. We shall come back to this later to see what we forecasted silver prices to be for this year. And according to technical analysts at FX Empire, for Foreign Exchange Empire, silver is trending to the upside as price pullbacks throughout April have been met with quick buys from investors looking to fill their pockets with the white metal. They note a critical resistance point at $15.50 per ounce. If silver settles above that mark, that will open the path for it stabilizing around the $16.50 level seen before the crisis. The takeaway: a worthwhile hold, but not without risk. The general consensus among market watchers, researchers and precious metals experts is that the long-term forecast for silver is positive. Although no asset is without downside risk, the case for silver is supported by heavy industrial use, as well as its strategic importance as a currency hedge during times of uncertainty. However, the strength of the dollar will play an important role in silver's performance. In short, silver is an alternative investment that's a relatively safe option in a highly volatile market. Many analysts are optimistic about silver prices in the short and medium term. Regardless of how silver performs in the months ahead, the metal remains a strategic hold for many investors looking to minimize risk, diversify their portfolio, and safeguard their wealth during times of heightened volatility. End of article. As you can see, even an owner of a bullion firm is more or less in line with our views. It's not guaranteed, of course, that we will be right, but at least hopefully it's some form of common sense and moderation that we are portraying in a world of potential chaos. Now, just for the record, earlier this year, on the 21st of February, we published our 2020 silver forecast, and we've put a link in the description box below. And this is what we said, quote, "But looking at the geopolitical and economic landscape, even with some disasters and some wonderful economic news, we find it difficult to see silver falling below $15 or rising above 23. Well, it did fall below 15, albeit for a very short time. Let's see if it reaches $23 or higher. What do you think? Is this the start of that sudden spurt upwards, I should say, upwards? Or do you think perhaps we might see just very moderate growth, or even a pullback? Be interesting to know your thoughts. Thank you so much for listening. If you haven't already done so, please subscribe to our channel. Not forgetting to press the bell sign and to pop over to Richard and Greg, where hopefully you'll do the same there. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.